Yeah. We move on to the daily time frame. You see that price as it retraced back to oh shit, as retraced back to the daily busy. So this could be an indication of price providing a discount for interested investors to buy longs for this objective and all-time highs, I believe. If we manage to stay at the upper half, we should be able to reach this high, August 17 high, with no issues. We've also run this low, 11th August low, so that means price could be likely to go higher, but as long as we maintain the upper half, then we'll be straight. And then another thing to note is this 4 hour wick I graded here. So I graded this wick and I used it in coordination with the daily busy. Stayed at the upper half of the daily busy and the upper half of the discount 4 hour wick. So this means bullish momentum, in my opinion. Plus, we also ran this low, and I believe like really price is just seeking a retracement to discount for investors to invest in longs. But here's also something that could happen, but I don't want to see happen, is that price could come back to this for our inefficiency, plus this opening range gap, and then topple lower. That we don't want to see really. It would be nice to see price inverse this for our CB, but it is one of the likely things that could occur. On to the 1 minute. Today seemed like an arm wrestling match type of day. No trade was probable, highly probable. There was no high probability trades because one, we have this opening range gap used as a PD array to send price lower. Also, we have the 4 hour wick and the daily person used to send price higher. So you don't know if you can frame two sides, or if you can frame two sides. When you can sell and when you can buy, there's a low probability. You see. So, but something I was able to see really was this. Price was right here, dropped, ran this low, and I really believed in longs. So yeah. Still, do not advise anyone to take trades when the market is like this, because you don't know which side to trust. You don't know whether to trust the top side or the low side. We see that price dropped, ran this low, right? These lows, whatever you want to call it, stayed at the consequent encouragement of the 4 hour wick. Also at the upper half of the daily busy. This is good. This is indicating what? Bullish momentum. But we really can't just rely on that solely because of this motherfucker right here. This opening range gap. If it was not there and had price not created this type of move down here, this displacement, right? It would be a bit trustworthy to trust longs, right? You really can't put too much trust in these concepts when things are not aligned properly, meaning things are not the right way they're supposed to be. I don't know if that makes sense. Like on good days, I really trust these concepts. Good days are when you can frame one side of the marketplace. It's low resistance, liquidity trading conditions, whereby prices at the upper half of inefficiencies. I really trust the PDRs on those days. Like I trust them. Also, when uh, the previous day wasn't a large range candle. Also, when There's volatility from a high impact news driver that had played out an hour ago or minutes, 30, 15 minutes ago, right? But yeah, let's get back to it. Note the time, 9:53. Price drops, runs this low. 10. 10 o'clock, not 10 o'clock on the dot, but 10:10. Still fine. Immediately, price inverses this run. Now, why do I trust longs? Why would I trust this inversion fair value gap and this 1 minute BSI to deliver us longs, right? Why can't I use maybe this one or maybe this one? I can use this one, but this one is at a discount level. It's more discounted as compared to this. I mean, you could trade this, but you'll have a bigger stop loss, right? Right. How can I trust this? Why do I trust this? One, we are respecting what? The consequent encouragement. We are just like, it's not that clean, but it's good enough. Respecting the consequent encouragement of the 4-hour wick, which is at the upper half of the daily BSI. And we've had this strong response. We've also ran the slow, right, into this inefficiency. The strong response went down into this, right? You can trust longs here because we're at the upper half. It's signaling strength. Price is so weak, can't get any lower. This will be a stop this low or just right here. TP could be this high. Now I have plotted this. Why this stop loss, right? We are at the upper half. We are signaling strength. We're showing bullish order flow signatures, which are price staying at the upper half of inefficiencies, both the 4-hour wick and the daily BSI. And then why this objective? It's a low-hanging fruit objective for starters, the closest, right? And then if you wanted, you could choose this one. I outlined this before it happened. But yeah. Or you could choose this whole inefficiency. But yeah, price traveled past this whole inefficiency at some point. And then look at this. What a first signature, right? Left the inefficiency, came back, stayed at the upper half, and then was able to run that high. This objective wanted to see get hit. But yeah, so this is beautiful.